Hi everyone, welcome back to the 19th episode of Learn, Invest, Grow Show. Tay and Adam are here. In the last episode, we discussed the tremendous power of compounding and why you should put compound interest to work for you. Without a doubt, it is sure to make such a world of difference in your financial future and help you achieve your financial independence a lot faster. Then we all know taxes put a drag on the momentum of a compound interest, but actually few realize how big a bite taxes take from our path to financial freedom. Sophisticated investors have always known this. It's not how much you earn, but what matters is how much you keep. So successful investors in the world understand the importance of tax efficiency. As we all know, there are many tax advantages accounts out there, but today, Adam and I are going to focus on self-directed IRA. So what is self-directed IRA? It is a type of a traditional or Roth IRA, which means it allows you to save for retirement on a tax-deferred basis, has the same IRA contribution limits, $6,000 per year, then the profits are not taxed each year, so you can reap the huge benefit of a compounded growth within the IRA. So the difference between self-directed versus regular IRA is in the types of asset you may own. If you have a self-directed IRA, you will enjoy more options for your investment and more control over where the money is invested. Self-directed plans can invest beyond conventional stocks, bonds, mutual funds, and ETFs. So you can invest in alternative assets like real estate, private equity, gold, private lending, even Bitcoin. Uh, and this broad category of investment allows you to diversify your portfolio and gives you the potential to earn income at a faster pace within your comfort zone. So, hey, Adam, I know your father, who's a retired dentist, is a big advocate of a self-directed IRA. Can you tell us how he's been benefiting from self-directed IRA in his investment?
Sure. So what's really interesting with my father is he didn't know about self-directed IRAs. He owned a successful dental practice, and when he retired, he had monies. I forget, I'm drawing a blank of what it is, but it's one of his retirement plan that was in that tax shelter, and someone from his CPA office was they're also financial planners or advisors. They talked him into rolling that money into an annuity, and at that time, it seemed like a great idea. And what we discovered was a few things. These financial advisors, they love pushing annuities because they make big commissions. I mean, I think the commission on that might have been like 6%. Might have been more. I forget the exact number. Um,
Wow.
but he got in at the right time because it was like the bottom of, let's say, 2008, 2009. I forget the exact timing, but he rolled it in to this annuity at the right time. And it's one of those variable annuities where like it tracks the market and then it ratchets up where like if the market's at X amount of dollars, then it stays there. Um, but then he had eventually, it was a few years ago, I think it was like 3 years ago, he had to move the money out because there was a lot of fees. But the problem was like he was talking to financial advisors and they're all trying to sell him like other products. Like they didn't understand the product he was in, a lot of them. And they're trying to sell, I remember like structured notes. I'm like, Dad, no, stay away from that. They make big commissions. I don't understand it. You certainly don't understand it. I don't even think they even understand it. These are complex uh, investments. But I I introduced him the idea that he could self-direct his monies. And you know, and what's interesting, his financial advisor would never recommend it. Self-directing your money where you take control and you can invest in, let's say, real estate. They would never recommend that because they don't make a commission. So my father, we found a company down in Miami as the custodian. They helped set it up, and my father's been investing ever since with his self-directed monies since like 3 years ago. And he's like, I wish I would have known about this for years. Like, I never knew about it. No one ever told him about it. And that's the problem. The financial industry is, I'm not saying everyone is like that, but a lot of times is they're not going to advise you something that they don't understand, and they're not going to advise you to go where they cannot make a commission. That was our experience. I remember they were very pushy with these structured notes. And I was trying to read up, and I'm like, this doesn't make sense. I don't like it. And so he self-directed his monies, and he's investing it in RealEstateInvesting, which is a hard money lending company, and he's also investing with another sponsor that we have the aggregation invest with. So he invests in two, and you know what? It's consistent, and it's doing very well. And I know, and the reason why we want to make this video is because I know there's a lot of other investors like my father that they don't know about these options. They have no idea. And a lot of times, like if let's say you have a job and you're going to retire, the first thing you're going to do is you're going to go see an FA or a financial advisor. And, you should know about this, because even ask them. If they tell you, oh, no, stay away from that, then maybe you should find another advisor, because this is an amazing tool that you could use where you don't have to deal with the volatility of the market. You don't have to deal with these complex financial products that a lot of times these FAs are trying to say they don't even understand it. And you can invest in something that's tangible. You can invest in something that produces cash flow. You can invest in something that's similar to my father has done. And that's really it to this. It's really something that we want to spread awareness that investors do have options. They don't need to go into annuity. They don't need to go into structured notes. They don't need to invest in stocks. You could go into alternative investments such as real estate, and that is something that is done well for us, either equity or debt, but always something tangible, something that we understand. Tei, does that make I know I'm throwing a lot of stuff out there.
Yeah, I can't agree more with you, especially in that the key to success in investing is invest in something you understand well, right? Because in your father's case, he's really have a good understanding over how real estate works. So he started as a active investor, and then moving on to the passive investing. Then he's taking advantage of this self-directed IRA for his tax benefits. So yeah, which is great. Yeah.
Yeah, and the company he's using, they're great. So if anybody wants a recommendation, I could refer you to the company my father uses. There's other companies as well that they all have their little different fees, but they've been good. They've been good. They always answer our questions, no problems at all. And if you want to know what we're investing in, you could always reach out too. I could direct you to the same place where my father's investing, and he's very happy. He's down in Palm Beach. He's living the retirement life. He just bought another house down there, and I'm actually going to be seeing him end of next month. So I'll probably be shooting another video down there with him. Yeah, I really, Tei, I think you hit the nail on it. I think you explained everything very well, and maybe we could have another webinar discussing.
Yeah, absolutely.
Or
Yeah,
there's more moving parts to this, and I talk to people and they have no idea how this works. It's really not that difficult. The setup, you just find the right company. They'll handle everything with you, and just know where. The hardest part, I think, is just knowing where you're going to invest your money, because there's a lot of options out there, and it could be overwhelming to choose where to invest. And how do you know it's a good investment or bad?
yeah, right.
I mean, there's more options now than there was a decade ago. That's a whole nother topic we spoke about with the Jobs Act, and you see advertisements for investments everywhere, but there's options. So anyway, I thank you everybody for listening. Please like, share, if you have any questions, feel free to reach out to Tay or myself. And, if you have a topic you want us to talk about, great. And until next time, happy investing, everyone.
Happy investing, everyone. Yeah, take care.